This is the strategy you guys earned. Be sure to watch to the very end so you don't miss anything. Hi, this is Tim from TradingStrategyGuides.com. Okay, I promised to show you my new trading strategy if you came through with at least 100 likes and 10 comments, and you did. It was awesome. So today is the day. The strat isn't very complex, but it's been very powerful. I call it Tim's MA Cross Forex Strat, or just MA Cross for short. We'll add this to our trading arsenal. This channel is for you guys, so be sure to comment below with anything special you want me to show you. I've only got a couple of comments about the factoid of the day. You know, where I share a random news nugget with you. So far the limited comments are positive, so I'll continue to do the factoid periodically. We're also going to be doing a bit more training in addition to the trade setups you've been seeing. And today I'm going to show you the new strat and a live potential trade using the new strat on the Australian dollar-Japanese yen pair. But first, I'll update you on these really nice open trades, and I'll show you one setup that I'm going to put on pause. Then I'll show you the MA Cross and the trading maxim for today. It's about to come at you. Remember to click the subscribe button and hit that bell so you don't miss any new strategies. You ready? Let's check out some charts. The S&P 500 had a very bullish close on Friday, right here, way up at the top of the candle. I wouldn't be too happy with this thing if it dropped below this and I didn't catch it. So I moved my stop to just below Friday's candle at 30.95 to lock in 58.75 on this one. Friday I moved the stop up on AMD to 38 to lock in $3.11 on this because Friday's candle was looking a little bit bearish. I'd be happy if we got a close right here. 311 is more than 3 times our original target. Just like the S&P 500, the mini Dow had a very bullish Friday bar closing right at the top, and we're getting a little bit of a pin bar here today so far. It's still early in the day though. So I moved my stop up to just below Friday's bar at 27,725 to lock in 345 on this. Kohl's Corporation also made a really nice bullish candle on Friday right here with a close near the top, moving the stop up to the original first target at 57 to lock in $1.70 on this. We sold Cinemark Holdings on Wednesday at 34.60, stop loss of 36.07, first target 33.62, still holding for this one. I mentioned on Friday I sold the Australian Swiss franc right here on Thursday at 67.05, and it's retraced just a bit, but it's pushing back down again today. Still waiting for it to hit our first target of 66.55. Here's a setup I talked about a couple of weeks ago. Great British Pound Japanese Yen pair. It closed above the triangle right here. That's a little wacky arrow, isn't it? Right here on insufficient volume, only 69% of the volume. So there was no trade. I'll continue to watch this. If the price goes back down and the volume and the volatility continue to decline like this, I will probably redraw this triangle. I'll let you know on this one. All right, it's reward time for coming through last week on the likes and the comments. I'm going to show you the new strategy that I've been using for the last few months. As I mentioned, I call this Tim's MA Cross Forex strategy, or just the MA Cross. I've been using this strat on Forex pairs only. It seems to work well on all 28 crosses of the major currencies. I haven't taken the time to test it out on cryptos or stocks yet. Maybe some of you guys can try it on those other markets and let me know how it goes. Okay, let me start by talking about the indicators that we use for this MA Cross strategy. The first one is a 100 period simple moving average. I use the simple moving average because it is slower moving and will not react quickly and this will kind of be our baseline moving average. Number 2 is the 20-period exponential moving average, and I use the exponential moving average because it responds more quickly to more recent price activity. For number 3, I use the 14-period average true range, which I use all the time for everything, for targeting and for stop losses. And number 4 is the volume with a 20-period average, which I use all the time as well to give me some idea of the commitment of traders. And here's a quick image of my chart. You see this blue, which is the 100-period simple moving average, this purple line, which is the 20-period exponential moving average, and of course this is the ATR, and this is the volume with the 20-period moving average right here. Okay, I call this Tim's MA cross, but the truth is we don't take our signals from a cross of the actual moving averages. Moving average crosses are just way too slow. They're way behind the times. They're way behind the trend. So what we're going to do is we're going to use the moving averages to tell us what the current prevailing trend is, and then we're going to use a price action cross of the faster moving average to get us into these trades. Let's talk about the rules. Rule number 1, you will only go long or you will only buy when the 20 EMA is above the 100 SMA. You will only go short or you will only sell when the 20 EMA is below the 100 SMA. This way you'll be sure that you are following the prevailing trend. Okay, let me show you a picture of this. This is a Euro USD daily chart. The 20 EMA is below the 100 SMA, so in this situation we will only take shorts or sell signals. Rule number 2, we buy when the candle opens below the 20 EMA and closes above the 20 EMA. Or we sell when the candle opens above the 20 EMA and closes below the 20 EMA. So again, let me show you a picture. Here's an example of a sell signal. This candle right here opens above the 20 EMA and closes below the 20 EMA. So this is the trigger to sell. Since the 20 EMA is below the 100 EMA, this is a valid signal. Now just to show you a long trigger, here's an example of an open below the 20 EMA with a close above the 20 EMA, but this is not a valid signal because the 20 EMA is below. So we will just ignore this signal right here. Rule number 3, there's no trade if the price moves more than 1 ATR from the 20 EMA. So let me show you a graphic example of that. Okay, this happens to come from the June 2018 Euro USD daily chart if you'd like to take a look at it. Here's a situation where we have our 20 EMA right here, and the candle opened above it and closed below it. However, the distance from the 20 EMA to the bottom of the candle here is 187 pips, and the ATR is only 100 pips. So this would be no trade right here. And the reason is because this has already eaten up a huge amount of momentum on this break, and it's a lower probability that price will continue from this point without retracing quite a bit. I want to show you this second example over here, and I want you to just imagine something for me for right now. I found this because I wanted to show you an example. Let's, for the sake of this demonstration, let's pretend that this is the 20 EMA and this is the 100 up here. I want to show you that because I want to demonstrate the fact that this movement right here was 364 pips from this moving average down to the bottom of this wick. The ATR in this case was only 90 pips. I still would not want to enter this trade because, again, this still ate up a huge amount of momentum. And when we talk about momentum, basically we're talking about sell trades, okay? A huge number of sell trades triggered down through here, and then price was pushed back up by the buyers. So that ate up all of this potential momentum for this trade. So I would consider this lower probability to sell at this point. So I would just stay away from this one as well. So anytime price moves more than one ATR from the 20 EMA on a trigger candle, I will stay away from the trade. And number 4, we use the standard trade management rules that I use on all my trades. And what are those standard trade management rules, you may ask? Well, let me share them with you. If, after entry, the candle closes back on the opposite side of the 20 EMA, close the trade for a loss. You will enter the trade with a full-size position only if the volume is greater than or equal to 100% of the average volume, and you can use a half-size position if the volume is greater than or equal to 75% of the average volume, and there's no trade if you don't get at least 75% of the average volume. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. You will close half of your trade at the first target for profit and move the stop loss to break even on the remainder. You will then follow the stops until the market takes you out. Here's some examples of the trade. This is a Euro USD daily chart. You'll notice that the 100 SMA is here, the 20 EMA is here. So we're only going to be taking sells. So the first trigger is right here. We have the open above the 20, the close below the 20. So we entered the trade right here. This is the target. This is the stop loss. 1.5 ATRs, 1 ATR, and the ATR right here was 58 pips. It came down, hit our target, and proceeded to go about 171 pips here. In all fairness, I probably would have trailed the stop right in here somewhere for the profit on the second half. The second signal is right here. We have the open above the 20, the close below the 20. Here's our target. Here's our stop loss. The next candle closed back above the 20, so I took the loss right there for minus 72 pips. Volume did not reach the average right here, you can see. And so this was only a half size trade. And that's the example of why I go half size if we don't get average volume. The next opportunity was on the very next candle, open above the 20, close below the 20. Our target was here. ATR was 65 pips. Stop loss was here, 1.5 ATRs, 1 ATR target. Price eventually came down, came very close to hitting our target right here. So that would have been a little frustrating. But it did hit our target here. It proceeded to go 148 pips. Again, in fairness, it's likely that I would have had my stop up in here somewhere. So we would have gotten a little bit more than 1 ATR in the second half. Okay, you can see we had an open below and a close above. I've already showed you this candle. This is no trade because the 20 is below the 100. Price pulled up, and again we got another signal right here. Open above, close below, 1 ATR target, 1.5 ATR stop loss. Hit our first target right here, and the price moved about 77 pips. But again, the entry was only half size because we didn't quite reach the average. So sometimes this acts against us, but that's okay because we still got into the trade. And again, I probably would not have had my stop down that low, probably somewhere in here, maybe a little bit higher. However, that's a few examples of the trade. Just like any other strategy, it doesn't win 100% of the time. Sometimes we get a loser, but that's part of the job, right? And that, my friends, is the MA cross strategy. Like I said, not very complex. It's actually fairly simple. I like simple. I don't like to have to think too hard when I do these trades. Usually it's, mid to late afternoon and I'm ready to quit by the time it's time to trade daily candles anyway. So I don't like to have to think too hard on these strategies. I have not tested this on anything but daily candles. So if you want to try using it intraday, let me know how it works out. Just make sure that you test, back test, forward test, whatever you plan to do. Don't use this on live candles until you have tested this, forward tested, back tested, Forex, stocks, currencies, cryptocurrencies, whatever, test it and have confidence in yourself that the strategy works. That's what keeps you going when you get through a drawdown period. So I'm going to show you a couple of live charts now of this strategy in action. Actually, it's one of my backtest charts. Now, I mark this chart up a lot more than I typically do for backtesting, but I wanted you guys to be able to see each of the trades and see exactly how this works. Okay, this is the Euro USD daily chart back through the beginning of 2018. So this red vertical line is the first trading day of 2018, and these are all the trade setups on this strategy. Okay, most of them are short trades because for the most part the Euro USD has been going down. So I'm going to scroll through these so that you can take a look at them. Okay, for the first few months of 2018, we were looking long because the 20 EMA was above the 100 SMA. This is not a valid trade because there was insufficient volume. Here's a nice long trade that went for potentially 125 pips. I'm going to show you the potential of these trades. I'm not going to try to figure out exactly how I would have managed them. When I backtest these, what I do is I look for trades that hit the first target. So this went 125 pips without hitting the stop, so that would have been a successful trade. Here's another one with insufficient volume, so we would not have taken that. Here's a loser for -90, and that was a half size. And here's a loser for -40, that was full size. Here's a winner that potentially went 116. Here's a winner that potentially went 80. Okay, now we've got the 20 EMA crossing over the 100 SMA, so we're going to start looking for short trades here. This is the example I used of a trade that went too far past the 20 EMA, so this was no trade for that reason. Here's a winner, potentially 118 pips. Here's a half-size loser for -47, another half-size loser for -65. Here's a full-size loser for -61. Now here is a really nice half-size, but it went potentially 350 pips. Okay, this happens to us sometimes. Sometimes we get into these trades and it's only half-size, but we don't know what it's going to do when we enter this trade, right? Here's a 41 pip loser. Here's a winner, full-size winner, that went potentially 252 pips. Here's a half-size loser. This is no trade because it's insufficient volume. Here's a half-size 60 pip loser. Here's a small 18 pip loser. Here's a potentially 81 pip winner. No trade here because of insufficient volume. 55 pip loser. Winner with potentially 118 pips. So you can see these winners are going a fairly good distance each time. This was no trade because of small volume, sadly, because this actually would have worked out fairly well. Here's a 159 pip potential winner, 112 pip, 114, and 93 pips. We got a few losers here because actually price is starting to go sideways a little bit. And now we have several winners in a row, good size, and one just a couple of days ago for +77. Now today price has moved back above the 20 EMA, so we could possibly be looking at an opportunity here in the next day or so. Of course it has to close up above the 20 EMA for it to open tomorrow above the 20 EMA. So keep an eye on Euro USD here for a possible opportunity in the next day or two. Do comment below about what markets and time frames you'll be testing out this MA cross strategy on, so that I have some idea of who's testing on what and where. Okay, let's take a look at the Australian dollar Japanese yen. Here's a live example of the MA cross strategy on the Australian dollar Japanese yen. As you can see, the trend just turned over from short to long on this crossover. Then the price pulled back through the 20 and bounced off the 100 and is now attacking the 20 again. Now we're going to watch for the price to close above the 20 to go long as it's not more than one ATR above the 20, of course. So here's the trade plan. We're going to buy a daily candle close above the 20 EMA as long as it doesn't move more than one ATR above the 20 EMA. On the breaking candle, we want to see the volume reach at least to the volume average. If it doesn't quite reach the average but does reach 75% of the average, we'll open a half size position to reduce risk. You can calculate that by taking this volume number, divide it by this volume average, and you should get at least 0.75. If you don't get that, stand aside on the trade. The stop loss, of course, is 1.5 times the ATR. First target is 1 times the ATR. So again, on the breaking candle, we'll look at the ATR here, and let's say this candle breaks up to here, and we enter our buy right here. We will measure 1.5 times the ATR down here for our stop loss, and we'll measure 1 times the ATR up here for our first target. If after entering the trade we get a candle close back below the 20 EMA, we'll take our loss right then and not wait for it to hit the stop loss. Just like with our consolidation trades, we expect this move to explode across this moving average and the momentum to carry us quickly to our target. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. And of course, the moving and closing back below the 20 EMA is an example of the momentum going away. When our price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. These are the 2 rules of cutting your losses and letting your winners run. Now, typically I do this with 2 positions. The first position has a stop loss and a take profit directly attached to it. The second position will have a hard stop loss and no take profit directly associated with it. The first position will close automatically when the first target is hit. The second position will then be allowed to run. When the first target is hit, we'll have to manually move our stop to break even on the second position. I will risk about 2% of my account on each trade. And that's today's setup on the Aussie yen. I tell you this every single time, and I'm going to keep telling you every single time. I'm not trying to tell you what to do. I'm only telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've developed a trade management plan that works for you, by all means use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And of course, as you know, psychology, in my opinion, is the most important part of trading. The trading maxims are my way of helping to handle my own personal brain. And of course, a maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today's Tim's Trading Maxim number 56. Our greatest weakness lies in giving up. The most certain way to succeed is always to try just one more time. Thomas Edison. I guess you've been living under a rock if you don't know who Thomas Edison is, but just in case you don't, he's the late 19th, early 20th century American inventor and businessman who is credited as being one of America's greatest inventors. I'm sure you've heard it said, winners never quit and quitters never win. You know, I failed at trading for quite a while, about 6 or so years actually. I don't think it should take that long to learn how to trade. I just had a whole bunch of brain things that I had to get over before I became successful. The stuff you hear me preaching about, that's the stuff I had trouble with. I would love to tell you that I never gave up, but I actually did give up many times. I did just come back though, so I don't know. What's the definition of giving up? It felt like giving up at the time, but I wasn't really giving up because after a week or two, I always came back and tried again. I'm glad I did. Giving up is never the solution. Of course, you don't want to keep doing the same thing over and over either, so don't give up, but, change your angle, change your strategy once in a while. Remember our Aussie yen trade plan here. We're going to sell a daily candle close above the 20 EMA. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. You don't want to miss any of my trading picks, so sign up for my free trading picks email list. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll be the first one to see them. You'll also get to see some of my new strategy setups. Best thing about it is, it's free. I'll put the link below the video. Be sure to come back to Trading Strategy Guides YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one, and maybe some extra Q&A or training. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. And don't forget to comment about what markets and time frames you'll be trying this new strategy out on. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great week, and I'll see you next time.